Alrighty, traders, welcome. It is Tuesday, November 28th, 2023. Let's get into our market wrap and our trading for today and see how we did, see what the market's provided for us. And if I look like I'm bundled up like Nanook of the North, it has snowed here. So outside doing a little shoveling for the first snow of the year. So anyway, let's move on. Let's take a quick look at where we are. All right, so the markets had just another sideways day today. The SPX up $4. That's pretty much it, 0.1%. In fact, I was looking at a trade today that I put on back 8 days ago. So back on 11/20, I'm sorry. I put it on 11/20, and I actually wrote down the ES at the exact same time because I had a different type of trade strategy in mind that I wanted to try out on a 112 trade, and it was at 4,600. It is 8 days later, and we were at 46.10. Okay, so the market's moved $10 in 8 sessions. And you can pretty much see this as you're looking at the chart here. Okay, just moving sideways in the last 8 days since the 20th here, when we were up here around 450 on SPY. We're right around the exact same level. So we really have not gone anywhere on SPY. And while we all expect a pullback, you can get some pullback in really 2 ways. One is the markets will pull back to those moving averages, like the 21 EMA or something like that. And 2, they'll just consolidate sideways while the moving average comes up to meet the market or meet the individual asset. We're seeing that happen here quite a bit, where we were above the 3 ATR, got even further above the 3 ATR. We haven't moved, but the 3 ATR has now come up to us. So we're still above it, but not as far as we were because the market's actually coming up and we're just consolidating sideways here. Does that mean we're getting ready to break out? Yeah, very possibly. If we take a look here at SPY, I like this chart as well. I know there's a lot to this chart, but you can take a look at the squeeze as well. So we are now, I don't know how many days, we're 3 days on the downside of the squeeze as well. So the squeeze that we had has also run out of steam. With MACD falling, RSI still overbought. You're definitely getting an overextended, overbought situation here. But RSI, again, markets can stay overbought a long time. RSI has been overbought since the 14th. Okay, so that's 14 days ago when RSI first became overbought on the daily chart on SPY, and it's still there. So nice sideways consolidation. Really pretty much of an ascending triangle here. I think it's just a matter of time before potentially we may even see somewhat of a break to the upside here. Getting pretty tight. We'll see what happens. Don't know if that's the right way, but we got a gap to fill at some point, maybe down here if we get a pullback. But if not, we may just blow right through this thing and start making a head to 465 or something like that on SPY. So which would be 4650 or so, not far from where we are, but it's almost 100 points higher here. Now, ES futures right now also 4660 or so and change for those futures. So futures are trading definitely higher than the actual market. So I think there's a good chance that we're heading higher here. So we're gonna, can we move from 454 to 465 or 460? Absolutely. I think we can get there. I think SPX can possibly get to 4650 or so by the end of the year, beginning of January, before the OPEX and VIX-X happens in the middle of January. Those would be the dates that many people are targeting there. It's an unusual occurrence when VIX expiration happens before options expiration. Could be a good opportunity for a pullback at that point in the market, and we may continue to rally. It's a long way till then. We have 45 days, 47 days or so until that happens, 48 days. We'll see what happens. All right, so there's SPY for you. If we take a look at the NASDAQ, fared a little bit better today, but really still pretty much sideways, and it's still down overall but it has not moved since the 20th as well. So really nothing happening on the NASDAQ. It was up a little bit better today with tech stocks. And then IWM, got all kinds of lines and spaghetti all over the place here. I know it's hard to read for you, probably watching on your tablet or something like that at home. But IWM, down day today, not a huge down day, but MACD has been falling. RSI is just stagnant, moving sideways. RSI is just dead right now. We're not getting a lot of trending movement in any direction. Now, we did break below this triangle here, so we'll keep an eye on that. Do we start to get some accelerating sell-off there? Weekly still looks strong. Daily's moving over. That has been the theme for a while. And the number of stocks on the S&P 500 above their 50-day moving average continues to climb. So now, it was a kind of a flat day, but it popped all the way up to about 78% or so. We're definitely in an overbought state, but we've been there for a while. Nothing says we can't stay there for a little bit longer. The put-call ratio, I want to jump over to the main charts. Take a look at this put-call ratio. So I point out that when you get above the 1 here, and I'm using the 10-day, this white moving average, when the 10-day breaks above the 1, you're in an overbought, scenario on the put-call ratio, which means you have a lot of puts. Okay, typically that's going to be a bit, bearish, or I'm sorry, bullish for the market when you're that extremes. And then we've just been heading lower on this. And remember when I said, as we head lower at this 10-day, the market may move higher. If we look at the SPX here, we broke down, we really sideways, and now this is really where it really started to pick up some steam to the downside. Well, that's the exact same level that the S&P was moving to the upside during that same period. So overall, I think it's something to keep an eye on here as we fall. But now you're starting to look to get into this oversold territory of the put-call ratio, which means too many calls, markets should start to potentially drop. So we'll wait to see if we get into this below the 0.7 range, and then as soon as we start to come back up, like we did here, you typically will see the market start to fall during that time period as it moves higher and then the market moves lower. I'm not saying it happens all of the time, but it's a pretty good inverse relationship, but it could be a chicken and the egg type of scenario as well here. VIX just dead. It tried to, I don't even know if I believe this spike on the day. VIX just moved nowhere on the session today. US dollar continues to get absolutely hammered. So this thing has been in a downtrend since way back at the beginning of October. And you've seen it start to accelerate here. I think there could be more pain ahead on the US dollar potentially. However, you are getting into an oversold area here potentially. So you're hitting the 3 ATR to the downside and RSI into the oversold levels. So you're starting to get into an oversold area. We'll see what happens on the dollar, but the weaker the dollar, the stronger Forex and the stronger the market typically. TNX, if we look at the 10-year Treasury today, yields dropped for the second day in a row after a gap up session last week. But two pretty good down days in rates here on the 10-year. If we're looking at TLT, pretty much just a sideways move today, still in this downtrend, right at the downtrend line. And MACD is rolling down, but RSI is moving up. And then the weekly, both are pointing higher. I think maybe a little break is due, but we'll see if rates continue to accelerate to the downside. And you got some Fed speak today about, hey, if inflation continues to come down, rates are just too high. I'm surprised that didn't move the markets a little bit more coming from one of the Fed speakers today. But hey, we'll see what happens. As indicated, with the dollar dropping, Forex is just rocking and rolling. So the Aussie dollar here, just moving and rocking higher, up 0.6%. The British pound continues its strong march higher. Again, as once the dollar peaked and started to tip over, then you saw all of these foreign currencies really start to move. Canadian dollar hasn't moved as much as the other two, but still it's moving higher. And then the euro as well, moving higher. So all really good bullish trades, all really good 112 opportunities on the move up. Now that we're starting to get maybe a bit overextended, we'll take a look at these for any kind of a pullback or so in here and see what happens. Bonds, we've already covered. Bonds, you did get a bearish PSR signal yesterday and then a bullish signal today. So right now it's just still struggling with trying to figure out a direction to go. If we take a look at oil today, pretty good little bounce in oil overall. So we hit the bottom of this trend. We've really just been consolidating sideways. Oil pretty much exactly where it was back on 11.8. So 20 days, oil really hasn't moved. It's oscillated up and down a fraction, but oil's pretty much held this range in here for a while. If we want to put some kind of a range spin or something on this, oops. Let's actually go in here a bit. So that's a pretty good little range there. We continue to stay inside this box. I think some would call it, the volatility box or whatever you want to call it. But this is the box that oil is in right now. And it's been holding above the 72, which is this support area here. So this support we identified, still holding on pretty well. We've bounced off of it twice. We've also failed at the 200-day moving average, and you still have your 21 and 50 moving lower. So I'm not saying oil can't go lower, but you've got the oil-producing nations meeting this week. So OPEC meeting this week. I think they spent a couple extra days and delayed the meeting by 4 days so they could get a couple of the OPEC plus nations on board. I've talked about this pretty much nightly for a week now. Really, I think you just got to look at oil here. And do you think OPEC's going to let this thing fall too much lower before they step in and really start to talk price production cuts? And I think if they can get everybody on board with production cuts, even now you're going to have Russia and Brazil cheating and shipping oil anyway. There's always cheating going on. However, I think if they get the majority of the nations under control on board, maybe some production cuts here. The U.S. is cranking out oil right now. U.S. production is off the charts, and that's also been putting some pressure on here. But I think if OPEC comes out and they cut production, I think that could also potentially rally this stock. So we've got a bunch of naked puts that we're working on that are below this box. So as long as we stay above it or in the box or higher, those things will be in great shape. We've also got multiple 112 trades on and some strangles in oil. Gold. Now, gold's the other story, and this is an interesting story here. Gold can almost not fit the move on my charts. A huge up week in gold this week. So we broke above this level here. Good move yesterday, and then a big gap up move today. So big move in gold, up almost $30 in gold, 1.5% cranking in gold. And we saw it coming here on the weekly. MACD's just been rising. RSI has been rising, bouncing out the 50. It's just been a strong move for 3 straight weeks now. And really, it's been a strong move, dating back here for about the last, 2 full months in oil. So about 9 weeks. I'm sorry, gold. I keep saying oil. Get oil on the brain. And MACD moving higher, RSI moving higher. Now RSI hitting into overbought, and today we broke the 3 ATR on gold. Doesn't mean we're reversing, but it's pretty flat. So I think tomorrow's an important, next session or two this week will be important. If we continue to just spike higher and we get the 3 ATR starting to head up at a pretty strong angle, and we follow that angle up, I think gold can have another pretty good run coming. If we start to flatten out here, get a little bit of a pullback, I think, right now momentum is to the upside on gold. And I really think we see new highs in gold coming, maybe even this week, maybe even by tomorrow. I think 2085 and right now we're at 2062. So another 20-point day, we could hit a new high in gold. So something to keep an eye on there. If we're taking a look at copper, pretty good move in copper again. So metals, metal futures moving higher, copper's up. And if we take a look at lean hogs, another decent day bouncing off of the 2 ATR line and the bottom of this Bollinger Band. We'll see what happens, but a good reversal day on MACD and RSI. One day doesn't make a trend, so we'll see what happens tomorrow. But like where we are on copper, we just closed a 112 for a 100% winner yesterday. And then everybody fretting on lean hogs, or I'm sorry, live cattle here. And live cattle been in a pretty solid downtrend with some big days. Today, was it a relief bounce, a dead cat bounce type of a thing? We'll see what happens. However, a good productive up day on live cattle, and like to see that. Question is can it continue? And you're still in a pretty decent downtrend here, and you actually broke below the downtrend line. So are we oversold? I think we're oversold a bit. RSI was indicating that and started to rebound a bit today on it. Question is, do we continue to move higher or at least sideways, or does the downtrend continue? So we'll see what happens here, but really good constructive day on lean hogs. Nat gas getting beat up quite a bit lately. Now today, it did spike higher significantly off of yesterday's reversal candle and then finished on its lows of the session. MACD, RSI still really heading lower on both the daily and the weekly charts. I don't expect to see nat gas doing a whole lot of anything at this particular point in time. All right, so there's where we are in futures. Let's take a look at some of the sectors for today. And finally, we have, instead of everything moving at once, with the markets barely moving at all today, let's see what was moving. So right now, you had retail moving, retail having a fantastic week. So with Black Friday last week, Cyber Monday today, all estimates out there is that retail's having some fantastic results. Sales are going great. A lot of big Black Friday stuff. It was really Black Friday week, not day. Cyber Monday continues today. I think they're expecting new highs on that. So everything's up from last year. So the economy, or at least the consumer, is in pretty good shape. Consumer is not afraid to spend. Retail really getting the benefits of this as it continues to rebound. XLY, here your Amazon and Tesla, your consumer discretionary, getting a little bit of a pop. And I think you got to really keep an eye on this, this look here. So you do have this ascending triangle here. If we kind of broke through it today, maybe a little bit. I think if you get this thing rocking to the upside, you got RSI and MACD fighting each other a bit on the daily, but the weekly still looks decent in here. So we'll keep an eye on XLY, and then real estate having a decent day, up 0.5%. The losers on the day, semis, but really after this massive semi run, this is pretty good looking on here. Yeah, MACD, RSI, heading down, pull back here. Maybe we come back to the 21 or the 50 and maybe another bounce higher. We'll see. We did get a PSAR bearish reversal on semis. And then, really the healthcare and pharma in the losing camp today, as well as oil producers in that losing camp, and biotech. But they've all had a pretty good run for now. Let's see what happens if the markets can continue their march, or we start to get at least some pullback here. Apple on the session was up just fractionally, just moving sideways, back underneath the 3 ATR, back to the 2 ATR. MACD's falling, RSI dipping below the overbought levels. I think that's something to be aware of, but Microsoft doesn't even care. So Microsoft hitting, I think, new highs will keep just moving our all-time high price level up. So Microsoft doesn't care. It's moving higher. Amazon down on the session, but only fractionally. And we'll go to Tesla. It's the other XLY. Tesla having a big day today. So a pretty big day on Tesla. And one thing to take a look at was you had this triangle pattern in here, and Tesla broke that to the upside. So you knew something was coming on Tesla. The weekly was already positive here, and now the daily really joining in as it bounces off the 21 moving average, starts to head higher. You've got your 2 and 3 ATR really starting to turn up along with the Bollinger Bands. I think this thing has some room to run. I think you could see Tesla on a bit of a run here. Would not be shorting that. And then NVIDIA just kind of struggling sideways down fractionally on the day. Meta up good on the session, but really sideways trending, and Google sideways trending. All of these are similar. They're all in this little bit of a triangle pattern that we've got this symmetrical triangle or a consolidation pattern, getting ready to move one way or the other. I think we move higher. So I really think we could be moving higher and seeing some new highs on a lot of these Magnificent Seven stocks. You got window dressing coming up. Typically, that's going to happen that last week of the year, right around Christmas, or right after Christmas. So keep an eye on that and see what happens. But that's where we are on those. So let's take a look at our account today. Right now, Delta 136. Very flat. Loving where we are on Delta. It's very neutral. Our Theta up at 1379.42%, which is fantastic considering this low vol environment. I love where we are on our Theta. Netlick popped back up today, mostly on oil and live cattle. Certainly helped out quite a bit today on our Netlick. So we're just, again, fractionally away from new all-time highs. If we look at BP usage, we did throw some trades on today. So added a new long-term 112 and also added a tiered FB112 trade. I'll touch base on that just briefly in a moment here. BP, that's 70%, of which 20%, or at least of which 10% of that is in BIL, the ETF. So I've got 10% of my buying power. So technically we're sitting about 60%. It's a little high, but I think we're fine with where we are. Right here, we can certainly unwind trades if need be. We're up 23,000. No, didn't close anything today. Up 23,113 still on the month. Up 7.2% on the month. Having a fantastic month again. Having a record month for us. This is our biggest month ever from a realized gain perspective. And then you've got Netlick up almost 3% on the month as well. So that's all good. I did take a look down here at some of our trades. Talked about some of these yesterday, but I dropped in the win rates as well. So right now on the long-term 112 for the year, these are win rates for the year, 100% win rate on the long-term 112. That's dating back years. Future strangles, we are at a 90% win rate, 89.8, 90% win rate on strangles. Love our strangle strategy. It's our second most profitable strategy. And when we look at ROI, so the return on margin that we're using, it's probably the best trading strategy. But we have a 90% win rate on our strangles. Okay, that alone you can make a living on. 112 trades here, 97%. We've only had a few losers on 112 trades on different futures that we have, and then 75% on zero DTE trades, which is pretty good. So we win 75% of our zero DTE trades. We do win 75% of our leaps. We're down because we had a terrible March when we actually, instead of taking an assignment, we just closed out some losses on those back in March, and then we gave up on the strategy here to put the money into these 112 futures because they were performing so doggone well. That's what we did with our leap money, and then we still are putting on spec trades. Most of these losses are hedges and a few other trades that are in here. We continue to hedge our way through periodically, and we also have a few other trades that have not gone well, but we have still a 58% win rate. So we are positive on the win rates for all of these trades this year. Overall, a 75% win rate on everything that we're doing. But really, when you look at the core strategies of the long-term 112, futures, strangles, and 112s, you're talking 90, 97, and 100% win rates. So that's where we are on that. We did not close anything today. If we look at the small account as well, it was up fractionally, didn't close anything out today. Great delta, neutral. Theta's light, but it's still, and we're light on buying power. We have a lot of room. We put some trades on today. We're going to be putting some more trades on tomorrow. But we've had a good month. We've already generated over 4% this month in realized gains. So there's no sense getting risky. We've hit our target. We'll keep moving. And if we look at the all-time highs, I think 380. I think today is the all-time high. Nope, 402. We are $7 away from an all-time high and the small account. And then if we take a quick look at the IRA today, Delta pretty flat, 0.11. I like where we are on Delta. Our Theta 298, which is okay, but still a little light. We did get 2 trades on in the last 2 days, 2 long-term 112 trades on. Netlick continues to move higher. I think this is a new all-time high, breaking the 241 mark today. So 241.064, another new all-time high in the IRA. We're up nicely on the year. BP usage did raise because we put on 2 long-term 112 trades. So that's getting that buying power moving in the right direction. We are up about 3% on the month. Our goal in a IRA is only 1.8%. So I think it's doing fantastic. So I like where we are. And then I'll give you just a quick glimpse in here at one of the things that we did today. We took one of our FB112 trades on, and give you a sense. This is what it looked like going into today before I added a second tier to it. This is what the FB trade looked like, and then here's what we did. I added a second tier to this. So the market has moved since we put it on. So we're tiering this up. So we added T2 here, and we took the trap now and made it wider. So the trap is now higher up. Okay, we've increased the trap by almost 50 points to the upside. And we've also gone from about a $7,000 trap here to over a $12,000 trap. So we've increased the trap thickness, okay, is width and height, I guess. So the max profit in the trap is now at 12 grand if we drop down here, and the width is even bigger. So if we start to move down, I think we'll be in really good shape. And if you look at the T+0 line on this, if we drop just 100 points here, we're looking at least a $2,500 profit on a trade that we got paid a small credit to get into. We're talking small credits, like $15 is what we got paid to put this on. So it didn't cost us really anything except some buying power. And it could generate, instead of that $15 credit we took in, which we really didn't care, we just wanted to put it on for as small a credit as possible. We took in 15 bucks. If the markets drop 100 points in the next week or so, couple weeks, we'll benefit over 2 grand. And if the markets drop about 200 points, we're going to start to see about a $4,000 gain, and if we drop about 300 points, we're going to start to see $6,000, $7,000, $8,000 gain on this particular trade. So it's a beautiful hedge trade that we have. So this is the tiered FB112. I know, crazy acronyms, a lot of different things, but that's where we are. All right, I hope you enjoyed this. If you got something out of these trades and you get something out of this overall, go ahead and like us on this video as well here. So drop a like below, would really do me a favor on YouTube. Get the word out to more people. We can help more people. So go ahead and like this video. If you're not a subscriber, what are you waiting for? Subscribe to my YouTube channel here and start improving your trading. Okay, many of the people started doing it on their own, having a little bit of a success. And then with that success, they took that money and joined up into the Discord over the last couple weeks and couple months. So we've got a record level of people that joined into the Discord. We are still running the Black Friday special as well. So even though it's Cyber Monday and Tuesday now, we're going to run that special till the end of the month. So you get 2 more days, technically 3. So 2.5 more days to join us. Use the code 40OFF, 40 off. Go to the MrTopTick.com/income navigator. I will put the link in the description down below. You can still get that discount. Come and join us. It's not too late. Make a resolution for the new year for yourself to try to make some more money, be more consistent in your trading. Okay? Stop trying to hit home runs and striking out so much. 3% a month. We're on target. We're doing fantastic. In fact, right now, on just the Income Navigator portfolio, I think we're up, what is it? 33%. So we're up 33% on the year after 11 months. So definitely hitting our 3% a month with one more month to go and some decent trades all percolating. Markets go up, markets go down. We don't really care. And we don't have to sit glued to a computer. Come and join us. Come and see what we're doing. I'd love to have you guys in there. Ask us questions. Learn to fish for yourself. Turn your life around. Turn your trading around. All right. Enjoy a great rest of your evening, everybody. Have a good night. Stay cold or stay warm. Stay cool. Don't get too upset about any of your individual trades. And come and join us. All right. Take care, everybody. Bye-bye.